So, what do we need to know about the relationship between lenders and agents and our buyers? So, I brought Dan Beutter.
Hello.
And full disclosure, Dan Beutter is with Peak Finance.
Correct.
And my best friend, and his wife and my girlfriend are good friends, and our sons are good friends. So this will be a very biased little discussion.
Absolutely. And that's okay.
So the first question is, Dan, have agents ever felt like a lender kicked them in the balls?
Use those hands. There you go.
What happened?
Especially, I would say, in the last few months. Absolutely.
So yes, it does happen, and I'll show you one of those here. Jeff Anderson runs a company called Rebuilding Warriors where they place service dogs with returning vets that are either disabled or with PTSD. And Dan and I in 2017 actually did a full-on MMA fight where we punched each other in the face and he kicked me in the balls. And since I edit the video, I'm only going to show the parts right now where it looks like I'm winning.
Okay.
But Dan won. But as you can tell, he outweighs me and is bigger than me. I'm taller than you.
That didn't help you.
It didn't help me at all. Yes, You're way more powerful. So what I want to talk about is in this environment where the biggest thing is agents obviously have buyers.
Yes.
That's the biggest segment. That's the biggest segment we have on real estate, period. More so than sellers. And so there's more buyers than there are sellers. So how are you helping agents get offers accepted?
Well, first it starts with the client because right now, ever since January 3rd, when the market's opened, interest rates have been going up. Not every day, but pretty much a steady pattern of higher interest rates. And in that time, we've gone up approximately a point. So what was 3% is now 4%.
Right. So first off, what I'm happy about is that we didn't plan this. And you look like a lender today.
I do.
And I'm doing my 68 comeback special Elvis look.
Yeah, you got to do something about your hair, though.
I can't do any better. I'm losing it. It is what it is. So let's talk about the difference. So do you agree with me that anybody that has a lending license can probably fumble through a loan?
Yes.
Okay. Is there a difference between having a lending partner that actually is part of the team with the agent, with the buyer, with the clients?
Oh, yeah.
There is a difference.
Big time.
So you and I worked together for a lot of years. And we did a lot of transactions.
Yes.
And I wasn't even primarily a buyer's agent.
No.
But what are you doing nowadays that differentiates our agents from the competition when, let's say, there's 24 offers on a house?
Well, normally what I would have done in years past is once an offer goes out, I'm on the phone reaching out to the listing agent. But when you're in competition with 24 offers, the listing agent isn't even going to answer the phone because they're getting bombarded from all sides. So what I do is I take the ability to answer the phone away from the listing agent, and I actually shoot a video going over the pre-approval, what the clients are qualified for, what their strengths are. If we have any issues, I point those out. But more than anything, it's shooting that video and creating that separation. Even if our
You're
clients...
putting a face with a name.
Exactly.
So that you're not just, they're using
Chase Bank.
Chase Bank.
Right.
No, they're using Dan Beutter.
Exactly.
And here's my cell.
Yep.
Here's who I am. Here's what I look like. Here's who the buyers are.
Mm-hmm.
And then we get involved with the listing agent, or I'm sorry, the buyer's agent as well,
Mm-hmm.
to be able to talk directly to the listing agent going like, listen, here's your lender.
Yep.
Here's your agent. Here's what we're doing. Here are the buyers. This is what we're going to do. Here's what they qualified for. It makes a big difference.
It does, because ever since I've been doing this, we've actually won out on these, 24 offer situations
When you weren't the highest offer.
when we weren't the highest
Or
offer,
even the strongest
even
loan.
the strongest, because, and it's not going to work for every time, but at this point, if you're in this business, you need to do everything you can to advocate for your clients. And so just by shooting that video, it takes 5-10 minutes to roll it out, but it's creating that separation of, wow, here's a live human being who took the time out to actually send out a video highlighting the details of their client and why we should consider their offer. And so, and I guarantee you, Chase Bank isn't going to stop and shoot a video, or a lot of lenders aren't going to stop and shoot a video,
They're not even going to answer the phone.
potentially. But
But you've always, like for me, back in the day before we did video, you would pick up the phone.
Mm-hmm.
I would tell you I'm submitting an offer. Here's the agent.
Yep.
You already knew the clients. You already met with them. You got everything together. And then you'd pick up the phone. You'd call the agent as well. You
Yep.
received an offer from Jeff Bonafetti. These are the clients. I've already worked with them. They're fantastic. This is what's going on. Here's how you get a hold of me. And I already know you work 7 days a week.
Yes.
Yeah, you're available pretty much at all times. And that's kind of important. But what I want you guys out there to look at is you have a lot of opportunity in real estate to be able to build partnerships without actually building a team. And part of your team is built in, and that's everybody from your TC to your manager to your broker to your lender to your escrow team. And that's sort of what we built our business on. But there is a difference between the way you approach it as opposed to what I see coming across our agents' desks.
Oh, yeah.
It's major difference. Now, one of the things that we're getting hit with all the time, which I know we've already talked about at multiple of our 4 offices meetings that you've been on, is when can you remove appraisal contingency?
Well, the reality of the situation is that appraisal contingency is on the table. It wasn't designed to be a negotiating tactic. It was just to allot a certain amount of time to where the appraiser was going to be able to get out to the property, inspect it, create their report, and get it. And if everything's good, then you can sign off on appraisal contingency. But it protected the buyer from, if it didn't appraise, they could get out of the contract that way. But now, because things are so highly competitive, that's become a regular negotiating tactic or factor. So when we recommend that a client remove their appraisal contingency before, or just submit their offer without an appraisal contingency, we have to have a very serious conversation with them in regards to how much money do they have to work with, what's the worst case that can happen, and this is where the agent plays a critical role. You've got to comp out those properties to make sure that it is going to appraise reasonably well, or if you already know that it's overvalued as far as what you're offering,
You need to know what that difference is.
you need to know what that difference
And
is.
do they have the money, and are they willing
Yes.
to write the check for it?
Correct.
Now, how about inspection contingencies, which I know doesn't directly relate to you,
Yes.
but we do have cases where we'll get somebody to take an FHA offer, the appraiser goes out, and we've waived appraisal inspection,
Yep.
and the appraiser calls out lender required repairs. What are your thoughts on that?
Well, lender required repairs are items that the appraiser calls out for terms of health and safety, and so they have to be fixed before we can actually close the transaction. And so they are serious. They automatically become loan conditions.
Right.
So, if you've waived your inspection contingency, and I don't recommend anyone do that because you don't know what you're going to get unless you at least have an inspection on the property, and we all want to stay out of court, right? And interestingly enough, even in our loan disclosures, it even talks to about getting a home inspection because that's how important it is. But a lender required repair, typically in a normal market, that would be something that the seller would have to fix or cure to move the transaction forward. Meaning their property, in the eyes of FHA in this case, is damaged goods that needs to be cured.
Repaired. Yeah.
Repaired.
Everything from peeling paint to a
giant
heater that
holes
doesn't
in the
work.
roof.
Exactly.
So waiving the inspection contingency is dangerous because you never know what you're going to get, and even outside of, if there are no FHA lender required repairs, I would recommend, and I'm just a lender, but you as an
You're
agent,
more than a lender.
oh, thanks. To make sure your clients don't come back to you.
Exactly.
6 months to a year down the line.
Yep. The first time it rains when they buy it in the summer,
exactly.
And like they've got roof leaks,
Yep.
which, guys, any of you that have been around a long time have been through this. Even if you waive the inspection, there are ways. You should talk to your broker, you should talk to your manager, or for God's sakes, talk to me, especially if you're in California. There are certain things that reopen a inspection contingency when the seller discloses things. But even if you waive an inspection, it does not mean that you cannot have one. Mm-hmm. And you want your buyers to know what it is they're purchasing, because the first person they're going to blame is you. Actually, it's a good caveat. I didn't even plan this one. Who's the first person we blame when a transaction starts going south?
The lender.
No, we blame escrow first.
Oh, is it escrow?
Yeah, usually we blame
neck
escrow.
and neck.
Yeah, you guys kind of like run neck and neck.
Yeah.
So, for those of you that don't really understand, I would get with your lender, or get with Dan. Why don't you take a little crash course on what lending actually looks like? Because, you're looking at the guy that we actually talk to, but how many people do you have behind the scenes that make a loan work? What, 20?
At least.
Yeah.
Yeah.
You got underwriters, processors, you got everybody else involved.
Yep. You got the disclosure desk, you got the lock desk, you got the doc drawer, you have the funder. I could go on and on. But basically, because I'm the pretty face at the front of the
You are
screen.
a pretty face.
I'm so pretty.
You are.
But
Well, your wife says you're pretty.
But I have a whole team working on the loan side, just on the loan side, to make sure that everything goes in. And I don't want to get too much into how the sausage is made, but there are a million little moving parts. Maybe not a million, but quite a bit.
100,000.
Yeah, sure. Of moving parts just on the loan side of things. So if your client doesn't fit nice and neat into the guidelines, if they're a little outside, there's a lot of maneuvering, a lot of explaining we have to do to get an underwriter to sign off on stuff. And that takes time, it takes energy, and it definitely...
It also takes cooperation from the buyer.
Absolutely. And that's why I always recommend that if someone's interested in going out into the market, purchasing a home, we deal with all this stuff before you get in your car and start showing properties, because I've been doing this long enough to know what could be a potential issue that's going to slow us down once we're in escrow.
So are we saying waste Dan's time, not your own?
Kind of, yeah.
Yeah. Well, yours is a simple phone call.
Right.
But, guys, you have to have your clients willing to cooperate, meaning when the lender calls and says, hey, I do need this W-2, I need an explanation for this, I need a copy of this statement, that doesn't mean 4 days later. That means, you know what, drop what you're doing, get it together, get it over.
Yep.
Because you guys, as buyer's agents, are the first people that are going to be all over escrow and lending to go, well, why is my deal not closing? Well, your clients aren't cooperating. So we need to set those standards up front and go, listen, this process is stressful.
Yep.
This process requires you to be able to dig through your drawers, pull out a lot of different paperwork. But there's a reason.
Yeah, we're not asking it just for our health.
And that just flat out happens. It happens on the seller side, it happens on the buyer side, it happens with buyers, it happens with lending, it happens with escrow, it happens with title, it happens everywhere.
Yeah, and that's just because there are so many moving parts to a real
But
estate transaction.
we know how to work through them. But
Exactly.
the biggest difference, guys, if you're not working with a lender that's a true partner, that's a true salesperson, that is selling you back to your clients, helping you sell your offer to the listing agent, then you're doing your clients and your business a disservice. Because I will tell you what, 21 years, the biggest difference I ever made in my sales career was actually getting a lender that understood sales, not just calculators, not just numbers,
Not just order takers.
not just order takers.
Yeah, because there are a million order takers out there, and in a regular market, that's fine, and then it becomes, well, but in this hyper competitive market, if you're not selling 100% your clients and the agent in the transaction as the lender, you're doing both of them a disservice, and you're creating more of a waste of time for everybody, because then you're just writing offer after offer after offer with no extra incentive for that listing agent to even consider the offer. That's what I bring to the table, is try to create that separation between the other 24 offers that came in, and that there is a live human being who can address problems, who knows what they're talking about, and conveys that the client is good to go.
It's really the partnerships between your lender, your escrow, your title. Everybody should be your partner in the transaction. You should never be alone in a transaction doing it. I know you guys are all 1099, entrepreneurs, and that's great, but you actually should all have a team behind you, because it's what makes the difference between Bob down the street that just throws things against the wall to see if they stick, and the rest of us that actually get things done, closed, and put money in our family's bank account.